Good morning, and thank you for attending another webinar in our New Mexico Recovery Series. The focus of the series is to highlight business recovery and resources available. I'm Jennifer Myers with the Economic Development Department. We're recording this session and we'll send out a link and a copy of the presentation to everyone that's registered. So feel free to submit your questions using the question function. We may not address them at this time, but we will address them later on after the webinar. So let's go ahead and get started. So very quickly, I just want to highlight our recovery squad. I'm the statewide disaster recovery coordinator. Felicia DePaulo is the program development specialist. Alex Greenberg is the financial program specialist, and John Winscott is our economic energy diversification coordinator. Underneath our names, you can see our responsibilities and our contact information if you'd like to reach out. And just very quickly, I'd like to mention the 7 disaster recovery coordinators. Each region has a regional disaster recovery coordinator available to assist and connect businesses, local governments, and communities. Here is their contact information. If you'd like to reach out to your coordinator, feel free to contact them directly. And if you've attended any of my webinars in this series, I've highlighted a few of our state programs. The first program is our Collateral Assistance Program, or what we call CAP. The Economic Development Department can pledge cash to cover a collateral shortfall of a loan in order to enable financing. This cash can support up to 50% of the principal with a maximum of $250,000 for under-collateralized loans. To learn more about the program, just click on the link on the slide. And another program I always mention during my presentations is the LEDA Recovery Grant. It is now called the Business Recovery Grant Program. The program parameters are still the same. The grants are tied to job creation, must be used for reimbursement of rent, lease, or mortgage payments, and are prioritized based on revenue decline. So please visit the New Mexico Finance Authority's website to learn more. There's still funding available for this program, so please take advantage if you are eligible. There's another program that is administered by the New Mexico Finance Authority. It's the Small Business Recovery Loan Fund. $500 million is available to provide loans to businesses that experience financial hardship resulting from COVID-19 pandemic. The eligibility is listed on the slide, so just click on the link to apply. So I have the next topic in the New Mexico Recovery Series is the SBA update. The SBA team of experts will go over important changes and host an exclusive Q&A only session to answer questions regarding SBA programs such as EIDL, PPP forgiveness, government contracting, 7A and 504 loans. Bring your questions. The SBA team will answer as many as possible. You will learn the basics of the EIDL, updates that have been made to the program, how to apply, steps for reconsideration and loan increases, and who is eligible for the targeted advance. So that's next week on November 3rd at 10 a.m. So just click on the link to sign up. We have another event happening next week. NMSU provides on-site energy efficiency assessments for business, industry, and government agencies. The program is focused on reducing energy use and related costs, as well as promoting the installation of renewable energy resources if applicable. Felicia DePaulo will be broadcasting live with NMSU, who will be conducting an energy efficiency assessment at Taos Mesa Brewing on November 4th at 9 a.m. So again, just click on the link if you'd like to register. Now, how do you stay up to date with all the programs and webinars I just mentioned? Just the easiest way is just to sign up for our weekly wrap-up. We list all our events and other resources that can help your business recover and grow. All right, so this is fresh off the presses. So yesterday, the governor unveiled the new 20-year strategic plan that will guide economic investment in New Mexico and deliver a more robust and resilient and secure future for all families. I've outlined all the key findings from the survey that went out. And as you can see, the issues relating to population growth, skill set mismatch, more focus on rural and underserved area, and targeted investment. The plan suggests action areas include more collaboration among economic development stakeholders, better alignment between higher education and industry, more engagement in disadvantaged communities, and stronger economic diversity based on the focus of the 9 targeted industries. Regarding workforce training, the plan tasks our department in higher ed to map degree programs to appropriately train students for key jobs in target industry sectors and develop a plan to market these programs. Regarding to outreach, the plan also calls for more assistance in rural and tribal communities with grant writing and on-the-ground technical assistance. The strategic plan also calls for continued investment in border zone, outdoor recreation, and more support for statewide incubators and startups. If you would like to read the 406-page report, you can easily do that by clicking on the top link. If you'd like to see the summary, you can just click on the bottom link as well. So with that, I will transition over to our speakers, the New Mexico Taxation and Revenue Department. All right, so go ahead.
Thank you, Jen, and good morning, and thank you for having Taxation and Revenue Department at this presentation today. My name is Aisha Mora. I'm the Director of the Audit and Compliance Division, and with us today presenting we'll also have Patricio Martinez, who's a Tax Examiner Supervisor in our Revenue Processing Division, and Mark Chaikin, who is our esteemed Tax Policy Director at the department. Our executive leadership team, who really works hard to make sure that we have all the resources needed to administer the over $9 billion that travels through our agency, is listed here. Our Cabinet Secretary, Stephanie Chardon-Clark, has done a wonderful job with Deputy Cabinet Secretary Emily Oster of creating this wonderful team of resources to serve New Mexico taxpayers on both the taxation side and on the motor vehicle side. So today we're going to talk a little bit about economic recovery and its relationship to understanding compliance for business taxes in particular. So the question of the day is, what is business tax compliance? What does that mean to all of you and to your representatives and to government entities? Tax compliance means being aware of observing state laws and requirements. Today, we're going to talk about a few ways that you can do that, which taxes exist in New Mexico for businesses, who is required to file, how to file a return, how to pay that liability, and then what happens if a taxpayer does not register, file, or pay, what happens if a taxpayer is unable to pay a liability and ends up in collections, and then what resources are available to help businesses stay in compliance. So why this is important is we want to stay to the left of this continuum. The compliance continuum, when we stay on the side as exactly what we're doing today of education and processing and compliance campaigns, it reduces risk and expense for both the taxpayer and the department. We want to stay. All of us want to stay out of audits. I know that's our bread and butter at the Audit and Compliance Division, but we want to make this process easier for taxpayers so that we don't have to go down that path, because we recognize that that path is a more difficult path for taxpayers to experience. And clearly we want to then stay out of collections, stay out of litigation, and ultimately we want to stay out of fraud and criminal cases. So the way that we do that in the most cost-effective manner is to keep taxpayers in voluntary compliance by doing outreach, by preparing better forms and instructions and gathering information. So all of your feedback is key to making all of these things very successful. So what are New Mexico business taxes? As I previously mentioned, New Mexico Taxation and Revenue Department administers over 36 tax programs. It's about $9 billion of revenue that fluctuates depending on economic activity. And as we know, we've had a lot of fluctuation over the last year and a half, but primarily that comes from business taxes. Today, we'll review the following tax programs: gross receipts tax, compensating tax, wage withholding, that's businesses with employees, and workers' compensation fees, that's also with employees. We're not going to go over in depth today income taxes. However, I wanted you all to be aware that that income also flows through to either your corporate income tax or your personal income tax, depending how your entity is structured. So gross receipts tax, unlike sales tax, which exists in most states, is a tax on the seller. The seller is responsible for filing and paying the tax. It applies to sale or lease of property and services, and all receipts in New Mexico are taxable. unless it's specified from an act from the legislature to be either deductible or exempt. These two things often get confused, so I'd like to take a moment to explain the difference. An exemption frees the seller from the requirement to report at all, so they would never file a return because they're exempt from reporting. Some activity would be, because GRT receipts are subject to other taxes, for example. A deduction requires the seller to report the receipts, but then deduct them on the return before calculating the tax liability. We do require you to have records to claim the deduction, and during an audit or an inspection of records, we will ask to review those records to substantiate that deduction. Compensating tax has gone through some changes, and Mark will go over that a little bit later, but in general, compensating tax is equivalent to a use tax. It complements GRT and has existed in parallel to GRT for many years. Most recently, we've broken this tax program out into its own form, and it applies into the following situations. That is when property is used in New Mexico by the person who manufactured it, or when the receipts of the seller would have been subject to GRT if the seller had Nexus. I know that's a little confusing, but it has changed recently, and local options compensating tax, which parallels gross receipts, as I stated earlier, took effect on July 1st, 2021. Similar to local option gross receipts tax, now you have to declare a local compensating tax rate to be added to the state rate. We are not really expecting a lot of comp tax filers because GRT has moved to destination-based sourcing, and now more sellers will remit gross receipts tax on property shipped to New Mexico. However, compensating tax can now be enforced against individuals, which was not the case previously. Withholding tax and workers' compensation fees are also run in parallel to gross receipts and compensating tax. Every employer doing business in New Mexico or deriving income within New Mexico who pays wages is required to withhold federal income tax and New Mexico income tax. All of these employers are required to register and file with the department, and they're also required to register and file for workers' compensation fees and report those to the department. Taxation and Revenue Department collects these fees on behalf of the Workers' Compensation Administration, and that law is cited here if you need more information on the requirements of that law. We offer a Grt Filers Kit if you've ever come into one of our district offices, and we'll talk a little bit about that, where those locations are in a few minutes. This Grt Filers Kit has been really our method of communicating, filing with taxpayers on paper for many, many years. As we've migrated to using more e-services throughout the years, this has become a less popular mechanism of communication. However, we still have this legacy communication in all of our district offices, and it includes any announcements that we might have on the front cover, due dates, what our offices locations are, rate schedules, instructions, and forms. So even if you do file electronically in TAP or bulk file, or your preparer files in bulk, the Filers Kit does still have some very useful information in it if you're interested in picking one of them up at our district offices. As I previously mentioned, we've really advanced our e-services platform, which is our Taxpayer Access Point, which the link is listed here. Recently, we've had some major enhancements, including our tax help guide. His name is Speedy. He's here in the corner, most appropriately, a roadrunner representing our state. And he has all of the answers to all of your questions. We are developing his knowledge over time, so he's becoming a smart roadrunner. If you have questions, he's not quite the AI type of roadrunner, but we do monitor questions that come in as you're filing. He'll show up on your screen, and you'll have a chance to chat with him, and he'll offer some helpful guidance. And we do review that, and we update our guidance as questions start evolving over time. So we strongly encourage the use of Taxpayer Access Point because it helps us process returns in a more efficient manner. We do still, of course, accept paper returns, but we do have a lot more guidance and information available in our Taxpayer Access Point. So if you're not registered, we encourage you to register on TAP and to use the platform and to give us any feedback that you may have about that platform. So the first part of being in compliance is to register your business. So the most efficient way to register is to apply for a BTIN is, as I said, in TAP. However, you can submit a paper form, and this form is available on our website. The form number is ACD 31015. Most common mistakes we see with this form is it doesn't always have required information like an FEIN or physical location, or the mailing address might not be complete, or associations aren't declared. So then we have to do additional outreach with our registration team to outreach to you to get all of this information. So, one of the ways that you ensure that it's complete is if you're using TAP, it really guides you through some of that process. But if you're using paper, please make sure to fill out the form to completeness so that we don't have to do that additional outreach. But we may reach out to you just to confirm information if we need to do that. Third-party access is really important for filers who have a representative representing them. This form that we have an image of to the right is our Taxpayer Information Authorization Form, Form ACD 31102. This form allows us to tax information to your authorized representative. In TAP, there is an accountant center where practitioners who work on behalf of multiple clients can use third-party access. Third-party administration is role-based, and it allows the administrator to do single administration. So for example, they might have one entity who files your GRT return, one who files your withholding, and then another representative that does monitoring of payments. So there might be some distribution of functions, and the administrator can manage access for everyone that has access to your accounts. So it's super helpful, and they can make all of that role-based as well. So certain individuals have certain permissions. So the main function there is to file returns, make payments, schedule payments. They can also upload returns in what we call as bulk file, and Patricia will go over some more filing methods in a minute. And as well as uploading W-2s and 1099s, which is a couple of years ago became a requirement to upload on our website on an annual basis. They can also update your account. I'm sorry, back one, Jen, almost done. They can update your account, close your account, manage officers, update NAICS codes and filing frequency. That's all very key to us making sure that we are processing your returns and your account properly. Most importantly, third parties can apply for managed audits and refunds, request balances, and submit a protest is our most recent change to TAP, which is, I'm really proud of this feature. It really helps us get protests in a timely manner and get that communication out to taxpayers and their representatives. All right, and now I will turn it over to Patricia Martinez, who's going to talk to us about how to file a return in TAP in more detail.
Okay, thank you. So as you mentioned, I'm Patricia Martinez. I'm currently the business tax supervisor. I'm going to be explaining a few topics over the next 9 slides. First is the overview of GRT return in TAP, which we currently see. Amending a GRT return, the procedures leading to submitting an application for refund on TAP, as well as deductions and when to claim them. Invalid returns when filing by paper, duplicate returns, the taxpayer's access point, common issues, payments, and what accounts to use when submitting those payments. And lastly, what I'm unable to file, as well as the payment plan. So let's start with this one. What we're currently looking at is a GRT return in progress on TAP. The taxpayer has an amount due of $56,110.48, as you can kind of see on the top in red. The taxpayer is asking if you have a GRT to report or any deductions to claim. So that's kind of the question there. The things to mention here are the taxpayer's past location pre-populates. So if you filed a return in the past, that information is going to automatically pre-populate for you as you're getting ready to file your next return the next month that it's due. Secondly, the payment type available after you have completed the return is giving you two options. You have a credit card or an e-check is the way that you can currently submit it. And the saved banking details, that's going to also pre-populate for you. So if you put in your banking information, once you come back into to file on tap, that banking information should be available for you to be able to see without having to input it again. Okay, on this slide on the left, we can see what the taxpayer originally filed. The taxpayer realizes that the new destination-based sourcing rules weren't followed and need to amend the return. The taxpayer corrects the filing by splitting the return according to the destination-based sourcing. And third, the corrected location may result in a different tax amount being owed. So as you can see here, the original return, there was one location that was provided. The taxpayer realized I'm now following the destination-based rules, and so I need to split those up. So we can see here that they split them up based on Deming, Maxwell, and Santa Clara, and that also resulted in a lower amount of tax being due, just because different tax rates apply when you're applying those different locations. So sometimes it could be more or less depending on how you're filing. Also to mention, I guess, is the gross receipts to report. It is going to ask you if you have any and also if there's any deductions. Continuing on the return, the taxpayer will select an amendment reason, which is required if the reduction in tax exceeds a threshold. This allows the department to be able to process your amendment in the quickest way possible when supporting documentation is received during this time. You can select Add Attachments to attach your supporting documentation, as you can see on the right side. And this is going to allow you to upload any kind of supporting documentation that's needed for the amended return. Additional amendments on this page are requested at this time by selecting yes or no. So if you have additional amendments, you can go ahead and select yes, and at this point in the return process, you can upload those as well. If a credit is available due to your amended return, decreasing the tax, you can submit an application for refund to request that credit. For a more detailed walkthrough, please visit New Mexico Taxation and Revenue YouTube channel. That's going to be on that channel is going to have more of the amended returns, the regular return process. If you're wanting to do an application for refund and you kind of want to see step-by-step guidelines, that's going to be the best way for you to do it. Okay, so next we're going to go into deductions. When claiming deductions on your GRT return, deduction codes must be entered. Our system is not accepting paper returns without a deduction code entered on the paper form. So if you want more detailed information on deductions, we do have a FYI 105. That's a good example. It's going to give you a lot more instruction about what kind of deduction it is and what kind you should be using. So it's kind of a good guideline for you to follow. Next, except if you are claiming food and medical deductions. So the food and medical are a type of deduction already. So there's no need to enter additional deduction type. I know I get some calls from taxpayers telling me, you know, I put the food and medical, but I don't have any deduction that kind of falls under that category. So if you're doing food and medical, just keep that in mind. That is a deduction and you're not really required to enter in that deduction type unless you do have other line items where you do want to specify that you do have an additional deduction, then at that time you can enter it. But if you're putting food and medical, you should be okay to just go ahead and move on at that point. Also, we have our Drt Filers Kit that's available. That's going to help you also with deductions, and that can be found at tax.newmexico.gov. Under the Form and Publications section, select Business Taxes, Gross Receipts Tax, and Gross Receipts Tax Filers Kit. That's going to have a list of instructions on our deductions as well as how to report your GRT and any other questions you may have regarding your filing of a return. Next, we're going to be discussing invalid returns. So select the appropriate tax return when filing by paper. This being a business tax return or a CRS return, just to clarify, Amended returns submitted by paper for periods prior to July 1st will be completed on a CRS1 form. Amended returns submitted for periods July 1st and forward will be submitted on their designated individual business tax accounts on a business tax return. This leads to, I guess what I'm essentially saying is that we have two different return types. We have a CRS1 form and a GRT form, and those are returns that are going to be submitted by the taxpayer. We just want to make sure that we're getting those on the correct form. If not, it kind of leads to taxpayer outreach and kind of slows our process. So please make sure that when you are submitting a return, you submit them on the correct form. The CRS1 return type can be found at tax.newmexico.gov under Forms and Publications. Select Business Taxes, Gross Receipts Tax, Compensating, and Withholding Tax. This is prior to July 1st, 2021. Submitting the correct form type will speed up the department's processing of returns and eliminate taxpayers having to resubmit the returns on the correct form. Next is duplicate returns. Duplicate returns are not accepted anymore for the 7 business tax programs. In the past, we did see 2 returns on GRT and could have applied them. That wasn't really an issue in the past. We did notice some of them were submitting maybe a quarterly filing and they had submitted them kind of in error, but we got 2 returns and we were able to process those. Duplicate returns now will suspend and they're not able to be applied. That's causing delays to the department because we don't know which return you're wanting to apply. If we get 2 returns that are the same, we're kind of wondering, is there anything different here? Do we need to apply it? How should we apply it? So that kind of leads to, if a second return is needed, please submit it in the form of an amended return. This will ensure that your return gets posted correctly with minimal or no delays, and we know that that amendment means that the taxpayer wants to make a change at that point, and we can go ahead and update their return. Next is taxpayers access point common issues. So we do have a few issues that taxpayers run into, and I kind of just want to address those just for your guys' insight so you can be aware of what's going on. First is make sure the appropriate tax account is selected when submitting payments or returns on tap. We do see returns submitted for the incorrect tax type. On the left-hand column, there's a list of different account types. So you may have a GRT, wage withholding, compensating tax account. When you first go into file for that particular account in return, taxpayers are typically selecting file now, and they're meaning to file for maybe GRT, but they're selecting file now, and that maybe the first one showing up is compensating tax. So I guess what I can say is just make sure that you don't select file now without actually looking at it, and just double check that the actual account in return that you're wanting to file and pay for is the one you're wanting to file and pay for. Because if you go ahead and select compensating, you go through the process, you submit a return, you make payment, and then you get a letter from the department telling you your GRT is missing a return or payment, and you're like, I know I just submitted it. You want to make sure that, did I select GRT or did I select compensating? We are seeing the returns posted and payments on compensating tax. So just a heads up on that. So verifying your tax account selection will ensure payments and returns get applied to the intended tax account and period as they were intended by the taxpayer. Okay, next is payments. This one I'm going to just read through. I think it's important that the taxpayer and individuals understand that we do have different bank accounts. So let me just go ahead and start with that. Beginning June 30th, 2021, the department no longer accepted payments to bank account number 412-310-7773. ACH and FedWire payments made to this bank account on or after June 30th, 2021 were returned, and taxpayers may have incurred penalties and interest on tax owed. Payments settled in account 412-310-7773 by June 29th were processed. We did process those payments for those who made the deadline to help during the payment transition. The following tax-specific account numbers replace the old CRS bank account. As you can see below, we have GRT tax account, the compensating tax account, and the wage withholding tax account. The things to mention is that these bank accounts are different and they do vary. Taxpayers are required to initiate separate payments for each of these new programs they're paying. On the right side, you can see that there are a list of other bank accounts if you are doing something regarding maybe healthcare or lease vehicle, non-wage withholding. Those are also going to be separate, so just keep that in mind. So if you want more information on a full list of bank accounts, you can go to our website at tax.newmexico.gov, select Forms and Publications. Under Publications, you want to select FYIs, the 400 series, and it's going to be FYI 401, Special Payment Methods. This is going to give you a list of bank account numbers and the different tax types that they will be filed for.
Thank you, Patricio. All of that was wonderful information, and it's critical that taxpayers understand that we've gone through a lot of change over the past few months, so I appreciate you taking the time to go over all of that detail with everyone today. So the question of the day is what happens if I'm unable to pay? So we've got you through registration, you have a third party administering your account, you filed your returns, and you're in a situation, especially now during the pandemic, where you can't pay. The department also offers self-payment plans on tap, and there's two different types that you can elect to pursue. One is a short-term payment plan. It has to be completed within 12 months, and a lien is not required to be filed. So, if you just need a little bit more time to pay that liability, that's a great option because it's one of the most least invasive options. A long-term payment plan does allow you to spread that liability over 72 months. However, a lien is required to be filed. A form of security is required for that payment plan. So, but it does give you that great option of spreading that liability out. And then when you're in a payment plan, the department does not pursue any type of levy action or any additional collection action. So it's really a way to signal to us that you want to be in compliance and that we're not going to pursue additional action. If you do not make the minimum payment or make payments late, or you establish new debt, or you're not filing your returns, we can file or send a delinquent letter, and pursue a count on our wage levies. We typically, as we talked about before, like to stay to the left of the compliance continuum and have a taxpayer file and pay on their own, so we're not having to pursue that, but we do have the authority to do that in the event that occurs. So please visit our TAP website if this applies to you and if you're struggling to make your payments, so that we can work together to get you into compliance. What happens if you fall out of compliance with returns as well, and payments? This happens to taxpayers from time to time. It's challenging sometimes to file returns, especially when you can't find workers to help you with your business, or whatever the issues might be. We're here to help you solve those problems in the least invasive manner as possible. Our managed audit is a great way to do that. If you're unsure of how to file, or you don't understand the taxability of your transactions, this is your opportunity to come forward and self-cure and anonymously discuss with you or your representative. The department will talk about your eligibility requirements, and most importantly, penalty is waived in this program, and interest is waived if you pay the liability within 180 days from the audit close date. If you'd like more information on how to apply for a managed audit, you're welcome to call us at the managed audit hotline, or send us an email, or visit us on our website. You can also apply in TAP for a managed audit. And we have an FYI, as Patricio stated, we have a series of FYIs. This is in the 400 series that will talk to you about all the details of managed audit and the timelines associated with that program. One of the bigger questions that I get on a daily basis is, how do you contact us if any of these situations apply? Our main point of contact right now is our call center. We are experiencing heavy volumes of calls due to the fact that we are directing all of the calls to the call center. So please be patient. We have a new callback feature, which will initiate a callback after 30 minutes, and we do try to get to all the callbacks by the end of the day. So if you are waiting on hold past 30 minutes, you'll get a callback notification. You'll get put into a queue, and then a series of individuals run the callbacks in the background while other people are taking calls. So that's been really effective for us to make sure we maintain contact. We also are working on a new program called Every Call Counts, and that is exactly what it means, that we want to hear from you, and every contact with the department matters to us. So we're working on implementing a survey to our call center calls, and so soon you'll hear options at the end of your call to give us your feedback. We'd love to hear from you, so please elect to give us that feedback when that opportunity arises. The other way you can, I'm sorry, one back, Jen. The other way that you can contact the department is through email. This clearly isn't as timely as the call center. You'll get a live agent always on the call center, whether that be first point of contact or a callback. But if you don't have time to wait on hold, or you just have a more detailed question, you're welcome to use any of the following email addresses. Our business registration email is listed here. That goes over the form I went over for registration. And our RPD, Revenue Processing Division, has several different help emails to help you with all of those returns that Patricio talked about. And if you need technical assistance with our taxpayer access point, you can email the technical help. We have been having some issues with SMS notifications for our two-factor authentication. So this is the email that you can use to help you get logged in if you run into those issues. And just in general, if you need technical help, that's listed here. We also have a lien and levy. If you end up in a situation where we're working through a lien or levy with you, we have emails, distribution groups for that as well. And then if you are fortunate enough to qualify for a business credit, you're welcome to contact our business credit group, or if you have questions about credits, they're happy to explain that to you. That's a way to reduce your liability. So hopefully you do qualify for one of those credits. Or if you run into an issue where you just need legal or policy interpretation, you're welcome to contact our policy office at the email listed here. Of course, if you would like to have some in-person assistance, we still have our district offices open in using COVID-safe practices from Monday through Friday, 8 to 5. We have implemented a new appointment system so that you can wait in your car in a COVID-safe manner, or in our lobby where you're socially distanced. If you need assistance with making the appointment, you can call our call center and they can help walk you through that. But really, we're just trying to anticipate what our in-person volume is. We are taking same-day appointments after 2 hours. So if you walk in, we'll make an appointment for you and you'll have to come back. This is consistent with how we're doing appointments for our motor vehicle division as well. And we're also using the same platform. So we're trying to have that consistent customer service experience across the board. Our current district office locations in which you can have in-person assistance is our Albuquerque district office. This is actually incorrect here. This is now 10500 Copper Point. We've moved locations from 5301 to Copper Point. Our Santa Fe district office is at on 1200 South St. Francis Drive. That's known as the Lujan Building. Our Farmington office is on 3501 East Main Street, and Roswell district office is in the same building as the bank at 400 Pennsylvania Avenue, and our Las Cruces district office is 2540 El Paso Boulevard, Building 2. So if you want to learn more about business taxes, as Patricia said, we have all this information on our website. We have recently launched our YouTube channel, which I believe even this presentation will be posted on our YouTube channel. And most importantly, you can subscribe to our notification service by accessing that information at this website here. That's very critical for information that comes out from our Office of the Secretary, our Public Information Officer, updates that come out from the department on changes. So if you would like to know more about that, please visit this website and sign up for our service. And now I'm going to turn it over to Mark, who's going to talk about ruling and policy issues. Thank you.
Thank you, Aisha. Good morning, everybody, and thank you for attending today. We're going to do a little whirlwind tour through some matters relating to policy. As Aisha said, the very last email that was on one of those previous slides was the policy.office@state.nm.us slide. I am the tax policy director, and so those will come to the tax policy office. That address is really good for more complicated questions, for, as Aisha said, policy issues, and for legal interpretation. If it's not clear, if you're not getting a clear answer from the call center, we will try to answer your questions to the best of our ability. It can take a little bit longer than getting information from the call center, so we do recommend calling the call center in the first instance, but we're there to step in if the issues get complicated. In that area of what we do in the tax policy offices, we are also responsible for issuing rulings. All the advice that there's lots of avenues for getting advice, the call center, emailing any of those email addresses, or emailing the tax policy office. When you get a response from us, at least on the email, you'll see that it says it's not binding, it's just advice to you. So what is a ruling? Is a way of getting binding advice from the department. The Secretary is empowered by statute to issue these rulings, and rulings are interpretations of law given to individual taxpayers who request them. So it's really addressed just from the department to the one taxpayer requesting the ruling. And as I said, those rulings will actually be binding on the department. There are regulations about rulings and more detailed guidance on how to request the ruling, and their effect is given in the regulations of that citation there in the administrative code. And that says a taxpayer may request a ruling for clarification of the consequences of a specified set of circumstances or interpretation of any tax statute. So in the regulations, you'll see that you have to set out your facts. There are requirements for submitting that ruling request, detailed recitation of the facts, what you think the law is that applies, and a statement of your question regarding how to interpret the law or what the policy issue is. We can issue rulings, but we prefer not to when the matter is currently subject to dispute through audit, protest, litigation, and so forth. So part of the regulation, you'll be required to state where your tax dispute is. If it's just a question relating to circumstances that there's no tax yet, or no assessment yet, or even no tax due yet, that's fine, state that. If the matter is under audit or protest, you'll need to state that as well. The department is not required to issue a ruling, even if you request one, and even though the request is made in the proper form. And we sometimes will not issue a ruling if we think that the answer to the question is very clear on the basis of statute or regulation and does not require analysis on our part. We'll just refer you to the statute, the regulation, and say that this is the clear answer that's provided in the law. And we will sometimes respond with a letter rather than a formal ruling. And again, it's only that formal ruling that will bind the department. So you've been pointed to a lot of advice today on our website. For example, the bulletins and the FYIs and other printed or published material is available on our website. You can also get verbal advice, email advice, and other written advice. Again, none of that binds the department. Only a formal ruling will bind the department. So even if you get someone on the phone and they say, oh yeah, do this, and it turns out that advice was wrong, that does not bind the department. Every ruling is also limited in its application to the taxpayer requested the ruling. And even though we publish those rulings on the department's website, they're not binding on the department with respect to any other taxpayer. So the rulings are a good indication of the department's thinking on any particular subject. But unless you personally or your advocate has requested the ruling, and by advocate I mean your accountant or other tax professional, it's not going to be binding. You'll see when the rulings are published, we redact identifiable taxpayer information, so it'll say company X or individual X, so you don't know who's asked for that ruling. And so if your matter does come to protest, you can turn to that ruling, but again, it won't bind the department if you're not the taxpayer who requested the ruling. If you are the requesting taxpayer and it comes to protest, audit, so forth, then you absolutely can rely on that ruling and say, no, look, you told me in this ruling that I could do this. And so that will then, the department will be stopped, prevented from taking a different position. Next slide, please. Next slide. So I'm going to just quickly review some of the 2021 tax legislation. There was a lot of legislation passed in that session that still obviously concerned with dealing with the COVID crisis and the economic impacts of the pandemic. One thing that very important that the legislature did in the last session was they created $600 rebates for low and lower income taxpayers. So taxpayers who receive the Working Families Tax Credit, who are not a dependent of another taxpayer and who are a New Mexico resident and who had income below these thresholds were entitled to receive that $600 rebate. And as you can see here, we've sent out about just shy of $110 million to about 182,000 low-income New Mexicans. And so that really made a big difference for people in just meeting basic expenses, especially lower income workers who were heavily impacted by the pandemic. So $600 may not sound like a lot, but it could be $1,200 easily per family. And that really does make a difference to people. And so we do believe that that's had a positive impact, keeping people fed, allowing them to meet basic expenses during this pandemic and while we work our way out of it. The second big deduction that was passed, or tax relief that was passed by the legislature in 2021 was the restaurant and bar gross receipts tax holiday. It was a 4-month tax holiday, essentially, for restaurants, bars, and food trucks. They were allowed to continue to collect GRT on purchases, although they were not required to. So a restaurant or bar had an option of either charging the basic price plus GRT to their customer or just charging the basic price. If they did charge and collect the GRT, then they were allowed to keep it. The bill also held local governments harmless from the revenue losses. So there are local government, local option gross receipts taxes. So there's a certain amount of the gross receipts tax that is imposed by a local jurisdiction. So the state held those jurisdictions harmless. That was a hit to the state budget, not to local government budgets. So 34.1 million in state GRT that still went to local governments, and then 17.2 million local hold harmless gross receipts tax relief was also funded by the state. So the states, the local government stood to lose over $50 million, and the state government made sure that they were kept whole. We expected approximately $90 million of relief to go to New Mexico's and bars, restaurants and bars, but uptake has been lower than expected. Restaurants and bars may amend their past GRT returns to claim this deduction. So it is a very useful deduction, again, because especially restaurants could charge their customers the gross receipts tax, but keep it. So that was intended to provide an economic boost to restaurants. And I should emphasize that applies also to takeout food as well. Sorry, Jen, yeah, I'm ready now, thank you. The other major bill that had tax implications that was passed was, of course, the cannabis bill, legalizing the sale of adult use cannabis. Adult use cannabis is cannabis use that is not medical. So the Cannabis Act legalized adult use cannabis for adults 21 and older. The Regulation and Licensing Department will license, adopt rules, and regulate the industry generally. Adult use sales will begin no later than April 1st of 2022. That is up to the Regulation and Licensing Division, so we'll hear from them. It may be earlier. Pursuant to legislation, it is permitted to be earlier, but it must be no later than April 1st. And the medical program is also moved to RLD from the Department of Health. Taxation and Revenue, of course, has the obligation of taxing these businesses and enforcing the taxes. So medical cannabis will no longer be subject to gross receipts tax. There will be as of June 29th, 2021, so that's already in effect, and will not be subject to the new Cannabis Excise Tax. The Cannabis Excise Tax itself starts at 12% and increases over time to a final rate of 18% in fiscal year 2031. Very important to note that adult use cannabis is also subject to the gross receipts tax. So cannabis sales will be subject not only to the special cannabis excise tax, but also to the gross receipts tax. Probably we don't have compensating tax issues because all sales will be made on premises. So we don't need to worry about comp tax, but there are two taxes. So there will be a new form for reporting cannabis excise tax, and these establishments will have to report both gross receipts tax and cannabis excise tax. Something that's not on this slide, but important to know, there is a deduction for wholesalers under GRT that will be applicable, a sale for resale deduction, and the cannabis excise tax itself only applies to retailers. So it's really only cannabis retailers who are selling adult use cannabis who are going to be subject to these taxes. 2/3 of the revenue goes to the state general fund, 1/3 goes to the municipality or county where the sale occurs. And I'm going to talk a little bit about destination sourcing, which lets you know where a sale occurs for tax purposes. And finally, the department may deduct its standard 3% administrative fee on local distributions. That's something that already exists in gross receipts tax, also being permitted under cannabis excise tax. We do expect this to generate, there's a lot of varying estimates here, but at least $27 million in the first year, although there will be losses from no longer charging gross receipts tax on medical use cannabis. And then those, we will see, we will develop data as we actually see sales starting to happen, but our projections are that this will create a modest to significant boost for state revenues and for local governments that do have cannabis retail businesses operating within their boundaries. Next slide, please. Next, I'm going to talk to you about destination-based sourcing and a little bit about local option compensating tax. Next slide, please. So there was a big change that happened in gross receipts taxes starting in July 1st of this year. There was legislation that was passed actually in 2019 and 2020, but it was just implemented in July 1st of this year. And in fact, there was another one, and I'm going to race through this. So in 2018, there was a United States Supreme Court case that changed what we call the Nexus Rules. The Nexus Rules determine when a state can compel someone to charge and collect our gross receipts tax, or in other states that have it a sales tax. Our gross receipts tax is pretty much our version of a sales tax. So it used to be that you had to have a physical presence. Wasn't much, but you had to have some physical presence in the state in order for the state to be able to tax you and impose the gross receipts tax on your receipts, require you to collect it and send it back to the state. That was changed by what's becoming a very famous decision in 2018 by the United States Supreme Court called the Wayfarer decision. And they said, no, that's an outdated standard now that we live in an internet age. Physical presence is obsolete. So what we're going to look at is how much connection does this business have with your state, and we'll look at that in terms of sales. So in the previous calendar year, if they had total gross receipts of at least $100,000, then in that calendar year, the subsequent calendar year, that person or business is now going to be subject to the gross receipts tax, required to collect and remit it. The effect of this was basically to level the playing field, to start to level the playing field between New Mexico businesses and out-of-state businesses. Previously, because we couldn't require the out-of-state business to collect the gross receipts tax, they had an economic advantage. So at Amazon, for example, if you ordered something off Amazon, and again, this is pre-July 1st, 2019, then Amazon didn't charge you the tax. But if you went to your local New Mexico business and bought it, there was gross receipts tax. So New Mexico businesses were at a competitive disadvantage, even with respect to New Mexico residents and purchasers versus out-of-state sellers, which is obviously not a good situation. So what the change from Wayfair to the new Nexus rules allowed is an evening of the playing field. But it still wasn't quite right because out-of-state sellers were only paying the 5.125% rate, whereas local sellers were paying that rate plus any local option taxes. So next slide, please. Okay, so before we get to this, what happened is on July 1st, we switched to what is called destination-based sourcing. And that means formally, prior to July 1st of this year, you would look to the location of your business to determine the code and the rate that you would report on your receipts. As of July 1st, we now use destination sourcing for most things. And I'll get into a little bit of detail very quickly. And so you will look to where the tangible personal property or the product of your service is delivered to determine. So if your business is in Albuquerque, but you're selling to a person and shipping the property to someone in an unincorporated part of Bernalillo County, for example, previously you would have used the Albuquerque code and rate. Now you will use the Bernalillo County code and rate. And this slide that's up here, there is this map, handy dandy map that appears on our website, including tutorials on how to use it. And you can basically just type in an address into this website and into this map, and it will tell you both the location code and the location rate that you can charge. We're working with various companies to see how they can, accounting and billing companies to see how they can link into this. And so when you make a sale and you take delivery information, you'll be able to just type that address in and automatically have that added to your invoice, but that's still a work in progress. And again, this only applies to, well, next slide, please. I think we'll just race through it in the next slide. So as I said, until June 30th, 21, GRT was reported at seller's place of business. There were certain exceptions. After July 1st, we're moving for goods and general services to the delivery location. The only exception there really is professional services, which still use origin-based sourcing. And the professional services are those that require either a license from the state or an advanced degree to perform. So it takes in quite a bit. Typical professional services may be accounting services, legal services, but other services that require a licensure from the state include things like cosmetological services, barber services, other things like that. So it's very important to determine if you need to be licensed by the state in order to provide a service, then you're a professional service. And there are new regulations effective as of July 1st that spell this out in a little bit more detail. Next slide, please. So how does destination-based sourcing affect reporting? For general services, in-person services, and tangible personal property, we've changed from origin to destination-based sourcing. For professional services, there's no change to remain origin-based. And finally, for construction services and real estate commissions, no change. Those remain sourced to the location of the construction site. So that's a special case for construction services, are always sourced to where the construction is being performed. And that was true even before these statutory changes. Analysis of these services, of these questions on sourcing, especially of services, can be complex. And we are encouraging you to talk to your tax professional, your accountant if you're starting up a business, or you can contact the call center or the tax policy office. And again, it's very complicated when it comes to services. So if you have questions, we absolutely do encourage you to reach out, and we will do our best to get you fast answers. Next slide, please. Finally, very quickly, prior to July 1st, 2021, there were no local option compensating taxes. There were local option gross receipts taxes, but not compensating taxes. And compensating tax is a use tax. It only applies where the gross receipts tax doesn't apply. It's generally if the seller has no nexus with the state, then and the goods are shipped into the state, for example, then the purchaser of the tangible personal property generally has an obligation to pay that compensating tax. As Aisha mentioned at the beginning, we expect fewer and fewer compensating tax filers because more and more out-of-state businesses are going to be required to report gross receipts and pay gross receipts tax. Finally, prior to July 1st of this year, the department was legally prohibited from seeking to enforce the compensating tax against individuals, not businesses, just individuals, but that now has changed. So if you're buying a large ticket item from someone and they're importing it into the state for you and they don't have nexus with the state, so that you will owe the compensating tax, the department now has the authority to seek to enforce that tax against individuals as well. Next slide, please. And that is it for me. So I will turn it back over to Aisha and Jen. Thank you.
Well, thank you for my wonderful panelists. This was great information. As I mentioned earlier, I'm going to, everybody that's registered, they're going to get a copy of the slides, a copy of the recording, and then it'll have all the contact information that you had mentioned. I know we got a couple of questions, so I will gather those questions that were asked during the presentation, and I'll send it to our great team of experts. So with that, thank you so much for, again, my panelists. I learned a lot of information. I found myself getting sucked in and forgetting the slides. So I appreciate your time and everybody that's attended. So have a wonderful rest of your afternoon.
Thank you for having us.
Thank you.
Thank you.
Thanks again.
Mm-hmm.